All right, so I want to come out and give my thoughts on this whole Robinhood shutting down trading. I'm going to be doing a whole video from start to finish of why this happened in the first place. But I do think it's very important that we talk about what's going on in specific to Robinhood restricting trading and how this can be very dangerous for the markets going forward. And I just want to talk about, why it's not retail traders' fault that this happened in the first place. I keep seeing people on Twitter, on mainstream media, they keep coming out and saying that, well, the reason why this squeeze happened on GameStop is because Wall Street bets came together and they drove this price up. And yes, that's one part of the story. But dig a little bit deeper and ask yourself, why were these hedge funds allowed to short more shares than they were available? They were short like over 120% of the float. And they could have made a killing on this trade if they took their profits, a few months ago when it was at like $3. But, they had fallen into the normal human emotions of greed and wanting more money. So they held on to their positions. They kept driving the price down with likely manipulation because I don't know how you can go naked short more shares. But, they got greedy and they made a mistake. They did not cover their position when they should have, and they got squeezed out. That's just a nature of the market. There was no insider trading. There was no hacking. People are saying that Wall Street bets hacked into the market. Like, it's so ridiculous. All this information was publicly known. You could just go on any website and see the short interest of GameStop, and it was over 100%. And people noticed it and they said, you know what, this is kind of weird. If I buy these shares and hold them and the price goes up, the short sellers are going to have to cover. But if they don't have any shares available to cover, they're going to have to pay a premium, and it's going to just squeeze this stock up. It's going to cause a short squeeze. That's not illegal. That's not a pump and dump. It's just looking at the security, evaluating the security, and saying, hey, there's a big imbalance here, and I want to take advantage of it. We do the same thing all the time on low float stocks that have too many short sellers. It's their fault that they got caught with their pants down. And what I really want to talk about is just how interesting the whole dynamic of it all is with Melvin Capital, with Robinhood, and then with their clearing firm Citadel. They're all connected, and it brings up a very interesting thing that we could see Robinhood be investigated for this, and who knows what will happen, but we'll see. The first thing I will say is that if you read Robinhood's TOS, they do say in it that they are allowed to restrict trading on any security at any time. So technically, they've covered themselves on that basis, but I don't think that will be enough. And I think that people are going to ask, okay, well, why did you do it? Why did you choose to restrict buying and not selling on these popular names like GameStop, AMC, KOSS? Because if you know simple economics, then you know that prices are determined by just supply and demand. So basically, if demand goes up, if people want to buy, then the price will go up. If people want to sell, meaning they increase supply, or they don't want to buy and they, reduce demand, it's going to drop. So basically, everyone knows. Okay, let me make this clear. No one is saying that GameStop is worth $500. No one is claiming that. We all know that this is a big squeeze. But the thing is that end of the day, stock prices are not determined by fundamentals. They're not coupled to fundamentals. Sure, you could be influenced by what a stock's fundamentals is and make your bias based on that. But, it's the same thing as a technical trader can look at a chart and make a bias based on what they see on the chart. It's not the chart that's making the stock price move. It's the trader who's making a choice to buy or sell based on whatever they get their edge from. So no one's arguing that it's worth this much. Everyone knows it's going to collapse when this squeeze is over, when demand dries up. But the issue is how Robinhood kind of went about with it, because they came out saying that they're going to restrict buying. They're not going to allow anyone to buy, but they're going to allow you to sell on these big names like GameStop and so forth. So, that's going to cause prices to drop. Like, simple as that. If you take away the buying side and only allow selling, the prices are going to drop. Guaranteed, especially on a play like GameStop, where everyone knows it's going to collapse once it's done. So the interesting thing is that the hedge fund that was originally squeezed out, Melvin Capital, they had received a cash infusion of like $2 billion from Citadel, another institution, to try to help save their position. Citadel is also a really big investor in Robinhood, and they're also, I think they're their clearing firm. I'm not 100% on that. I think it's Apex, but I do know that, they are involved in some big way with Robinhood. And there is definitely a question to be asked of what was their involvement with Robinhood's decision. Was it them that told Robinhood to make this restriction? If that's the case, then there is a really big issue there in ethics. Like, imagine Citadel telling Robinhood, hey, we're not going to buy your order flow anymore. Because if you're familiar, back in 2020, a big story came out of how Robinhood makes money off traders by selling their trades to institutions so that they can front run them. It was a big story. People still use them for some reason. I don't know why, but that was a massive story. The main way that Robinhood makes money is through companies like Citadel. So there is definitely a very easy way for Citadel, who has invested $2 billion into a firm that is short GameStop, to convince Robinhood, saying, hey, we're not going to buy your orders anymore unless you stop this trading. It wouldn't be hard to convince Robinhood at all. Like, all right, you're the boss, you make our money, and they're going to stop it. Now, regardless of that, they didn't have to restrict only buying. Like, if there was some issue of, fraud or SEC was investigating, then they could have just halted trading completely. But the fact that they had allowed people to sell but not buy, it's going to cause a panic. It's going to cause prices to fall. And it's just hilarious how Robinhood says that they do this because of, trying to protect the retail trader. But the simple fact is, if they didn't do this, GameStop would probably be at, $600, $700. It would keep on squeezing because it's such a big story, and shorts deserve to get squeezed on this. Once again, no one is asking the question of why were these hedge funds allowed to short more than 100% of the short or the float. And people really need to turn that narrative towards that, because there was a video by a popular YouTuber, Louis Rossman. I highly recommend you go watch it, where we could see a really big consequence in terms of regulation being made about this, because people are saying that this is hacking, and people are saying that Wall Street Bets is doing market manipulation. And the simple fact is that people in our government are not smart in terms of technology. They're old. They're 60 plus years old on average. And when they hear words like hacking, manipulation, they're going to react to that very quickly and want to put in regulations, especially considering the fact that their biggest donors are these Wall Street banks and institutions. So we need to make sure that we make the narrative straight. This was not completely caused by Wall Street Bets coming together and buying GME. This would have never happened if, number one, hedge funds were not allowed to short over 100% of the float. And number two, this would have never happened if they weren't greedy and they took their profits when GameStop was down at $3-4 a few months ago. They had the chance to get out. They had the chance to make huge money. They didn't. They got greedy. They got screwed. They don't deserve a bailout. They don't deserve anything. They made a risk. They made a choice, and they made the wrong choice. They have to deal with the consequences. Simple as that. So, end of the day, one thing I will say too is that everyone's saying, cancel Robinhood. And I agree, you should not be using Robinhood at all. It's not a good trading platform. There's not any good charting. There's no level 2. It's very basic. At the same time, though, It could not be all their fault. We saw Webull came out and they said that their clearing firm, Apex Clearing Firm, had restricted trading on the same names, but they at least came out and said it's our clearing firm that's saying that we cannot make these trades. So kind of hard to blame Webull for that. But with GameStop's PR, or not GameStop, with Robinhood's PR saying we're going to stop all buying, but you can sell, and that's all they said, basically, it's going to, cause a mass exodus of Robinhood investors. So it's a very interesting story. And I do think it's one that we need to follow, because this is going, one way or another, it has to lead to some type of change. And I hope it's not going to be changed towards retail traders. The one best thing to come from this is to finally make it so that hedge funds need to be transparent on their positions, because everyone else does, right? People on Wall Street Bets, they were transparent on the fact that they were buying GameStop. They weren't hiding anything, but these hedge funds are hiding their positions, using manipulation to short more than the shares available. So we just need regulation in terms of the hedge funds, not the retail, but the hedge funds. So let me know what you think about this. Hopefully you didn't get screwed by this whole happening. I will say that it also wasn't just Robinhood. There was also TD Ameritrade came out. They restricted some trading. But the thing with TOS is that they didn't restrict all buying completely. They just said you cannot use margin. And I think that was a lot smarter of a thing to do, because end of the day, us as traders, we should be allowed to take risk if we want to. Yes, I know that we signed these papers that allow brokers to have ultimate authority, but if we choose to take the risk, who's to say that we're making a bad choice? So this will be very interesting, and I hope that regulators make the right choice. Okay, so while editing this video, a lot more information has come out about, what's going on. A lot more things have come out from Robinhood and from the Congress as well. So I want to add them into this video because I think they help support my narrative that it seems like Robinhood was convinced by Citadel to do this. So let's just look at some things on my screen here. First of all, check this out. Someone had received this notice saying, "Hi, in light of recent volatility, we are restricting transactions for certain securities to position closing only. However, due to the risk involved in your position, we're closing it automatically, 4,500 shares at a price of $118. Now, that price is very interesting. So remember, earlier, my speculation for this was that Robinhood had halted buying on this, so then their hedge fund investors could cover their shorts, buy back shares. This, to me, supports my thesis completely when you consider the fact that they got liquidated into basically the low of day. Look at the intraday chart. Let me edit this line and type in 118.93. Look at how close that is to the low of day. And that poor user sold automatically, was forced by Robinhood to sell right there. Not at 200, not at 350, not at 500, but right when the stock turned around, he was forced to cover or sell his shares, allowing the institutions to buy and cover their shorts. And also, it's very interesting, Robinhood users received an email today. They received an email today that tomorrow they're allowing buying again. I wonder why they had to restrict trading today but not tomorrow, even though the price is still extremely volatile. The price is still up in the hundreds. We know it's going to collapse. I want to ask, what was their investors' exposure short yesterday before close and today before close? Because that would really just tell us, were institutions able to cover today? Because if that's the case, then I don't know how Robinhood can cover themselves, be caught for helping institutions manipulate price action. Also, Congress has now come out with an official letter to the Attorney General talking about this exact thing, what I said earlier, how Robinhood and Melvin Capital are both affiliated with this main company, Citadel, because Melvin is owned by them, and Robinhood earns 40% of the revenue from Citadel. Knowing the involvement that they have with Robinhood, it is clear that the actions taken today were motivated by anti-competitive reasons, not for concerns of volatility claimed by Robinhood. Because of this blatant conflict of interest, it needs to be investigated. Also, one last thing. On CNBC today, the CEO of Interactive Brokers, I think it was. So this is an interview with the chairman of Interactive Brokers. And I mean, he just says it right on the table why they did this. It's kind of crazy that he just admits it.
$17 to $500. There are roughly 3 million contracts outstanding in the options market. If one of those options is worth, say, an average option I estimate worth about $10,000 now, so that is a loss of roughly $10 to $15 billion on the one side and $10 to $15 billion of gain on the other.
So what he's saying is that if institutions were still trapped in this position, and tomorrow with the gamma squeeze happening, if GameStop holds above these levels and those contracts expire, they will owe investors $10 to $15 billion.
I'm afraid that there may be brokers who may not be able to meet these margin calls. So that is the...
So just to be clear, you're worried about the middlemen. Are you doing this move to protect yourself or to protect your customers?
Partly to protect ourselves, but mostly to protect, of course, to protect our customers, but most of all to protect the marketplace.
Most of all to protect
the clearinghouse.
Clearinghouse.
So if there are $10 to $15 billion of losses in there, somebody has to pay them. Will they be able to pay it? Is the big question.
Who cares? They made the mistake.
Do you understand people's anger, your customers?
So there it is. He just lays it out. Because clearinghouses cannot shoulder the loss, it should not go to you and me. So really crazy stuff. This is going to be a wild story for the next, I don't know how long, but yeah, just want to add this in.